Hello, everyone. Happy Sunday to you, and in fact, good morning. Welcome to another session. And in this video, we shall be reviewing the US oil from a technical standpoint. And to make things clear here, this is going to be a follow up video on our US oil analysis that we did last week, where we were opportuned to take over 1,200 pips profit on this commodity. And let's quickly run through how last week went by. And during the course of last week's trading session, we had a beautiful channel between the $75 level and the $73 area, where we said we are looking forward to either a breakout or a breakdown of the channel to give us an opportunity to either buy or sell. And in fact, during the early hours of last week, we saw the breakout of the $75 level here, which gave us an opportunity to buy. Then we moved our stop loss accordingly to lock in some profit, and price moved significantly well. And as soon as price got into the $76.65, we began to see some selling pressure on that area, which gave us an opportunity to look out for a counter trend opportunity at the breakdown of the $76.20 level. And in fact, this is what happened here. We took advantage of this move to the downside. We sold and into the channel that we identified at the beginning of the week. Then again, we begin to see some buy pressure come in around the channel between the um, $75.40 level and the $75 area. And we anticipated some buy position at the breakout of that structure one more time, which we joined here, and we rode the move all the way up. And we continue to think of adding more position to our existing trade as price action continue to find higher highs above the $75 level. So we had a structure here at the $76 level where we were looking for a breakout to add more position. The price came back again. It was quite a up and down before we finally saw that breakout of that structure one more time. So we saw the breakout again, we joined it. Then we wait out for that breakout of the $76 level. We had another position at the breakout of structure while we look forward to a breakout of the $77 level to add more position. And you saw here, I gave an update. Then we saw a breakout, added another position to hit. We saw a breakout of that structure. Then we waited for another breakout of the $80 level here. Sorry, $78 level. I think I did the correction there. Then you see a breakout of the $78 level, and price continued. When we started seeing selling pressure around this area, we were thinking that price would break out to 70 breakdown of the $78 level, but that did not happen as we saw price continue to the upside. And in fact, we added more position, and as you can see here, we took our profit at the $80 level. So for those who would like to see how we took advantage of the trading opportunity last week with daily commentaries, I will be linking you to that video right in the description box of this current video for reference purposes. So with that being said, let's dive into the current chart. And on the daily time frame here, this is the situation we have here. So following the multiple rejection of the $80 level since the beginning, since the later part of last year, and we saw how that level also held selling pressure at the beginning of the year. And we were lucky enough to be part of this buy position as price action continued to find higher highs above the $75 level. Now, at this point in time, you would agree that we are at a critical point in this market as price action is back into the $80 level, a level which has been a strong selling niche for participants in this market in the last 1 month. And if you look at the nature of the $80 level at this current structure here, you can see that it shares a confluence with the bearish trend line that has been holding selling pressure since the month of June last year. So you can see that as a trend line here, and then look at what happened last week where we took our profit. That was a TP target for last week, the $80 mark area. It also shares a confluence with that trend line at this point. So you will agree with me that we are at a critical point in this market as price could go either way from this current structure. It could respect the trend line one more time to incite another sell off, or we could see a situation where price breaks out of both the trend line and the key level at the $80 level to give us an opportunity to buy the US oil for this week. So these are the things we are going to be looking forward to. And talking about buying the US oil here, if you look at the previous lows here, this was the lowest point price has ever been since the beginning of last year. That was a $70 level. And price was unable to break the previous low. As you can see here, we found a higher low. And for me at this point, this price action is transitioning into something that looks like a reversal pattern in the form of a double bottom structure. So we had the first touch at the $70 level here, where the $80 level could likely be the neckline of that's this current structure that we have right now. So we saw the second touch, price was unable to break the previous low, then price is back at that potential neckline zone at the $80 level. So if we are going to be buying this, then we want to see that this reversal pattern becomes mature. And the only way this reversal pattern will be mature is if price breaks out of the $80 level with buying pressure above the structure, then it will be a very good position for us to join a potential rally to the upside. Now, with this being said here, I would like us to scale down to a much lower time frame so that we can see things more clearly. I was able to identify some structures around this area, and in that regard, I will be scaling down to the 4 hours time frame here, where I would like to share with you what I was able to identify on this pair. So now look at what's happened here since price tested the $70 level here in the month of December last year. We saw that price action continued to find higher highs, hereby giving us that bullish trend line that we saw here. And unfortunately for the sellers, we saw selling pressure at the beginning of the year, which led to the breakdown of that bullish trend line to signal a bearish momentum. So price broke down that structure here to the downside. Then we found another higher lows here. And as a result of that, we had a new bullish trend line, which I was able to connect here, and price continue to climb to the upside here, and right now we are at the $80 level, excuse me, that we identified on the daily time frame, which is a very critical point in the market right now. As you can see, how that level has been a strong selling niche for participants in this market since the breakdown of the structure happened on the first week of the month of December. So right now price is heading towards a strong supply zone, a major a major key level at the $83 level. If we go to as far back as the month of October, we saw how that level at one point in time was holding by pressure before it was broken during the month of November. And since price broke down that structure, you can see how that level has continued to be a strong selling niche for participants in this market. The same thing happened here um, at the beginning of this year as well, and price is heading towards that area. So we are going to be seeing, looking out for how price is going to be reacting to the structure during the early hours of this week. And one thing I'm looking at is this: since we have something here that looks like a reversal pattern, we are at the $77 level, serving as the neckline of that structure. We might likely see some selling pressure come in here to gather some liquidity, coming back to retest the $77 level here, which also shares a confluence with that bullish trend line that we have here to incite a new wave of bullish momentum that might likely be strong enough to break out of the $80 level. That is one scenario I'm looking forward to. And if price decides not to drop into the $77 level, but instead it continues to climb up and find buy pressure above the $80 level on our lower time frame, then we might want to be joining that potential rally to the upside. Where as soon as price gets into the $83 level or probably the $82 area, which I said has been a strong selling niche in the last couple of months, we will be moving our stop loss accordingly to lock in some profit here and wait out and see how price action will be reacting to that structure to decide if we will be anticipating a sell-off back into the support level of this channel, or we look out for a breakout of that structure to give us an opportunity to add more position to our existing trade. So this is what I'll be looking forward to this week on the US oil, but be rest assured that I will be jumping right in the comment section of this video to give you an update on what my expectations are after monitoring how participants in this market will be reacting to this current structure around the $80 level during the early hours of the new week. I hope this video has been of immense help in making your personal decision on the US oil for this week. And if it did, I will be glad that you support this project by clicking the like button so that others also can be able to, so that the algorithm will be able to push it to a much wider view, much wider audience for digestion. So thank you very much for being part of this. Thank you for listening. And I look forward to seeing you same time on Monday. Write in the comment section as we get prepared for the new week. Don't forget to follow me on my TradeView platform at Darksherry, spelled DARCSHERRY, so that you don't miss out on the regular updates I normally share in the comment section of all of my videos. Thank you once again and do have a wonderful evening. Bye bye.